Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi, welcome to Economics. This is a special episode in a sense for us as ThePrint has touched a 1 million mark on YouTube, 1 million subscribers on YouTube. I would like to thank all our viewers, all of you who have been watching. Economics have contributed to this in a great deal, and we would want you to continue watching us and help us grow. So thank you very much. Coming to this week's Economics conversation, price rise, inflation, and even interest rate cuts keep coming back into the headlines frequently. But this time we will talk about price rise more from the perspective of what consumers are being put through in the aftermath of the lockdown and as the country reopens. And then there is a MPC meeting or the Monetary Policy Committee meeting coming soon, early next month. Over the last few weeks, we have been seeing headlines of potato prices, tomato prices, onion prices going up. Petrol and diesel prices have also gone up because of the government revising taxes, and it has touched 80 rupees and beyond in Delhi, so it will be much higher in other parts of the country. So what exactly is happening here? After the lockdown, when the economic activity has been slowly resuming, why are prices suddenly going up? Is this a supply side issue? Is it a demand side issue? And is this good for the country at a time when we want the economy to revive? We have Professor Ila Patnaik with us, and we are back in our studio this week. Ila, thank you for coming. What exactly is happening first with prices of staples?
Yeah, I think a lot of supply constraints due to the lockdown was what pushed prices up, especially in April and May. And now with the June data coming in, we find that those prices are coming down. So it was one issue. The main issue was that there was a lockdown, things could not move. Another very important issue was that data could not be collected. So a lot of the time data has been imputed. So you tried to guess at when the field operators, investigators could not go. So they really tried to put together some data. But yes, it is true that particularly in rural area now, so the June data suggests that in rural areas, there has been a small increase in some prices. Particularly transport, for example, it comes under the miscellaneous category, where we know that there are difficulties due to the lockdown. It seems that these difficulties will go away. I mean, that's what the trends indicate, that as the lockdown has eased and supply constraints have eased, these difficulties will go away. So I think the one point that my co-author Radhika Pandey and I make in this column is that the Monetary Policy Committee should not be looking at this number as one where it has not met the inflation target. This is above the inflation target and really above that band. And so normally we would have said that RBI should raise interest rates when inflation is above the band. But in this case, we are saying that actually this is very temporary. This will go away with easing of supply constraints and with the lockdown easing up. And RBI should not raise interest rates despite the inflation rate being higher.
Interest rates, is always something which all of us, including economists, seem to be so closely tracking. But for people, the people we are obviously addressing would probably be more worried about prices and prices of things like onions and potatoes and tomatoes. And you talk about rural inflation. We've never heard of inflation being separated as rural and urban. Why are we doing it now?
See, we do get data for rural and urban, and we saw that urban inflation was going up for 2 months, that period of the lockdown. But now we are seeing rural inflation just above the urban inflation. Now, on the one hand, if you think about the economy, then rural India is doing better than urban India. In terms of activity, if I compare normal activity to activity today, then rural India is far more normal because you don't have lockdowns there. The spread of the disease is limited. Also that the way people function, unlike us in closed rooms, they don't contact the disease if they are working on their farm. And so it's less risky in rural areas. So activity is more there. Demand will also relatively be more, compared to the normal. So not compared to urban, but if you take the long-term normal of rural areas, then at times when they are back to work, their demand is higher. The difference between the two is lower in rural India compared to urban India. And so there is with supply constraints and with demand being normal, you get a bit of inflation. So that's really, the difference has happened because of the differences in activities in urban and rural India, as well as the differences in the supply constraints and how transport is contributing and various lockdowns. Many states are still going into lockdown, and how that is affecting activity.
Ila, the price increases we have seen in petrol and diesel. This happened after the lockdown was ended and unlockdown started, and there was a lag when petroleum companies were not increasing prices and the taxes were increased, and even they started their daily setting of prices. And it has crossed a certain threshold. It's a mental threshold. It crossed 80 rupees, and in some parts diesel became more expensive than petrol, and that was always the other way around. Diesel was always cheaper. So the question that started getting asked was that, why is the government allowing fuel prices to go up like this? Because this will obviously contribute to inflation, plus this will hurt growth. I saw some analysis talking about how diesel prices going up will make transportation expensive and obviously lead to inflation. What do you have to say on that?
See, there are two sides to this coin. On the one hand, yes, it's true that if it's more expensive to transport goods around, then that does contribute to an increase in price. However, it may not really contribute to inflation. So inflation is a continuous increase in prices, a persistent increase in prices, not a one-time increase in prices. So if transport is about 10%, then yes, if you have a 1% increase in that cost, then for once that cost will go up. Not necessarily that it keeps going up. But the other question really is that the government needs revenues. And given the state of the economy, the GST collections are down, will be down, imports are down, customs will be down. So this is a way to collect taxes. Now, initially the estimate was that you might get about 1.5 lakh crores through this additional taxes. But if petrol is going to be not sold as much because of the lockdown, because transport is less, it may be less than that. So it may be, let's say, 1 lakh crore instead of 1.5 lakh crore. But the government is using it as a means to collect revenue. So I think that, yes, we can say that they should, not do this and not hurt the common man. But at a time like this, you also see people saying that they're not getting their salaries. So somewhere you have to find the means to spend, and I think that's what's happening here.
In your column this week, Ila, you also talk about the quality of data, because for 2 months, more than 2 months, the country was locked down. People could not move around and collect data, and there is something called imputation or imputation methodology you talk about. It's a very technical term. Can you tell us what went wrong during these 2 months, and what is the question that is being asked about the quality of data?
So the first question is, how do you collect data, price data? So field investigators go to various centers, to various markets, and they note down what the prices. Now, suppose there are no transactions. Okay, so that's the first problem. If there are no transactions, so if for a month nobody got haircuts, then the price of haircuts cannot even be recorded.
Yeah.
So that's the first problem.
So there'll be a blank.
Yeah, because nobody got a haircut. So if there's no transaction, you cannot have a price of that transaction. And second is if the field investigator cannot go. So even if there are some barber shops that are open in our example, but the field investigator can't go from one district to another and is unable to access those shops and go and collect data, then again there is no data. So you try to do something like, okay, what was it before, what was it after, and try and use some way to impute what it might have been during that period. But it's not really the actual price during that period because there were no transactions or there was no data in that period. So I think people are questioning the data itself for the lockdown period and saying that, is it reliable? And we would certainly say, given the state of the data, don't start taking action. Certainly not an action which may hurt a lot of people, such as an increase in interest rates.
So what is imputation methodology?
Well, you try to look at 2 points and you use statistical methods. So suppose it's a simple average. Suppose at one point, 1 month, something was 5, and then for 1 month you couldn't collect data, and the following month it was 7, then you could have said it's 5, 5, 7, or you could say it's 5, 6, 7, right? Or you could say, oh, in this month actually, say it's the price of mangoes, then, and you're going from July to August, then you could say that in this month, normally, when we look at past seasonality, then it suddenly jumps from 5 to 7. So then your data could be 5, 7, 7. So it's really how you calculate the data that is missing. So that's, various methods can be used, and that's what's...
And there are doubts on the credibility of this.
People are raising doubts on this.
So, bottom line is, we should not be worried by this 6.09% CPI inflation.
That's what I feel.
You think the trend will, go down in the coming months?
Yeah, I think we will remain within the target. You see, demand is low. What inflation, in an inflation targeting regime, the way a central bank is able to control inflation is really through the impact on demand. Okay, and various channels operate, but primarily it is a demand channel. And in this case, activity is low, demand is low. We do know that there were supply constraints. We do know that there were data issues, and so it should not be that this should make people too worried. So let's watch, let's wait, let's see what coming months are. My hunch and my expectation is that prices won't be rising very fast because supply constraints, particularly supply constraints in rural areas, are being eased, have been eased, and that these difficulties are likely to go away. The sowing has been good, so you'll get a good harvest. And so we should not be too worried about this inflation number. Growth is low, so we should not be hiking rates.
People should not be too worried by the increasing prices. This is possibly temporary, and the trend will go down in the coming months. We should wait and watch, and the Reserve Bank of India, the Monetary Policy Committee, when it meets early next month, should not jump the gun, if you want to say so, and increase interest rates. Thank you for watching this episode of Economics, and thank you once again for getting us to that 1 million mark on YouTube. Thanks to all of you, our subscribers. We will be back with another episode next week, and keep watching us and coming back to our channel.